My name is Jeanmonod, Regional VP of Sales here at Angel Oak Mortgage Solutions. I've got our two subject matter experts with us today who I love doing these with. I've got Lisa Lee. Lisa, say hello and introduce yourself,
Hello.
please.
I'm Lisa Lee. I've been with Angel Oak Mortgage Solutions for about 5.5 years out here in Utah. So just out here, breaking records in the burning heat and, staying cool.
And Oscar Ungo is out of our Miami office. Oscar, please introduce yourself.
Hey everybody, good morning and good afternoon. My name's Oscar. I'm part of the inside team at Angel Oak. I'm an account executive here too. Happy to be here.
Great. And you guys, you were really lucky today with Lisa and Oscar. They're two of the best in the business. So, really look forward to getting your questions here. But let's talk about, what's happened in the marketplace over the last few weeks. There's been a lot of volatility in the non-QM world. That's why, it's really important to partner with a strong leader in the industry, someone who's vertically integrated. So if you're not signed up with a non-QM lender today, definitely do your homework. But the volatility is really just based on liquidity. It's, everyone who's closing government loans, they're backed by the government. This is all private money. So, and the one thing I really want to make sure I stress on this step back in LTVs is really just temporary, right? We're gonna get through this, and it's the biggest thing I want to make sure I communicate to everyone. It is not a credit issue. These borrowers are great borrowers. Our average credit score is over 700. It's about 735. Our average LTV anyway is only 73%. So these are really, really strong borrowers. So let's dive deep into this. Before we get started in the bank statements, I think we're going to do a poll. And the question of the poll is, who has originated a bank statement loan in the last 12 months? So we'll give a couple seconds. A couple of statistics I love to throw out here while everyone's taking their vote here. In 2020, new business applications grew by over 24%. And in 2021, and that was the biggest increase in over 10 years. In 2021, new business applications grew by 17% over 2020. This is the fastest growing segment. Self-employed borrowers are the fastest growing segment in the industry today. And guess what? Those people that applied for a new business application in the beginning of 2020, they're eligible for Angel Oak's bank statement program today. So let's see, we got Oscar. Do you want to can you see the results there, Oscar?
I can't see the results.
Okay, let's see if I can. Okay, here it is. I got it right here. So 65% of you have not originated a bank statement loan in the last 12 months. Huge opportunity. But one thing I'm glad to see is that number's coming down. So that number has usually been 70, 75% have not. So for the 35% of you that have, thank you. Hopefully it was with us. And let's get into, Lisa, cover the highlights of, let me get there. Let's cover the highlights of our bank statement program. Hold on.
Gotcha. So the bank statement program, obviously, and we're basing everything on our current offerings. So right now the credit scores start at 680 for the bank statement program, and we will go up to 80% loan to value. This product is basically created, as we talked about, as an alternative documentation option for these brilliant self-employed individuals, which are out there and have great CPAs and financial, or people out there that help them do their taxes. But not only if they show low taxes, but also if they just want more of a home, if they need more income to qualify, this is a great way to do that. So alternative option. We allow loans up to $3 million without exception, and our minimum loan size is $150K. It's a 12 or 24 month personal or business bank statement product, either or, not both. We allow 2 years from a credit event. So that's BK foreclosure, deed in lieu of, short sale, those type of things. All of our rates are 30-year fixed. We do offer a 40-year interest only, which we'll see later down. 2 years self-employed is required, whether you do the 12-month or the 24-month program. So we do still have to prove 2 years self-employment. On the business bank statement product, you need at least 50% of the business ownership to qualify. On the personal bank statements, they only need a quarter ownership to qualify, and or the personal bank statements is great for your 1099 employees, contracted employees, right? So those that aren't owners. We do purchase, cash out, rate and term, of course, and for owner-occ, second home, and non-owner occupied properties. We have the new 1099 product available. This was released last year. It's in lieu of bank statements, so 1 or 2 years 1099 with year-to-date earnings. We'll take a look at those. Great for inconsistent deposits or those large deposits that we would normally exclude for being atypical. So great for those people that are door-to-door sales, realtors, etc. Again, we do the 40-year interest only. That's available for us with a quarter hit to the rate. So how we start is, of course, up front, we submit these loans to our bank statement review team, and what they're going to do is look at the net deposits and exclude anything that's not included as a business income. They're going to automatically approve those loans at 50%, the income, excuse me, at 50% of those net deposits. That's our starting point. Then, of course, we're going to evaluate what type of company they have and what type of business it is, industry it is. That's where we're going to decide if maybe it warrants a lower expense ratio, which of course we would need a third-party verification of. And some of those, such as large businesses, car dealerships, huge restaurants, those that have high overhead, we may actually have to increase that expense ratio. So once we get the net income approved and we see that, we'll have that conversation. You'll have that with your AE. And of course, with we require 2 appraisals with loan sizes over 1.5 million. And we will do non-warrantable condos on all of our programs. This does also now include nightly rentals, so for VRBO and Airbnb type things. So as long as they don't have a reception desk that they can schedule at, pretty much. So that's about it.
Yeah, great job, Lisa. Great job. And again, we're going to get to your questions. We want to cover a couple things. Like I said, we really want you to be experts in our bank statement program. So, Oscar, give us the key things as an account executive that you really love to look at on a 1003 loan application.
Well, like Lisa said, we have our reviewers that are going to be reviewing the deposits on the bank statements and calculating the income. Your AE is your partner. We're part of your team. We're going to be reviewing your 1003 and credit report to check if your client meets the initial requirements of the program. So it's important to have a quality 1003 with accurate information. That way we can make the best decision possible, because we're going to be sending you our quick qual that'll include a loan submission checklist and parameters for you to prepare your file before submitting to underwriting. That way you can come back and get the least amount of conditions possible. Some of the key things that I can see that set back that pre-approval, because we all know that you want a quick turnaround time so that you can go to your client and help them go shopping, or maybe it's a file that's already under contract. You want to make sure that you list the rent or mortgage payment of their primary residence on the 1003. It's really important because we do a 12-month look back, and we also look for payment shock. So we do a 12-month look back on housing. You also want to double check that the business name on the 1003 matches what may be on the business checking account. So if you're going to be using a business checking account, you want to make sure that those two names match. If you're using a personal checking account, you want to include what it is that your client does. So that may be for a sole proprietor. They may not have incorporated. They may not have a fictitious name. You do want to include what it is that they do, their position or title on the 1003. And finally, we do need to look at DTI. So we want to see liabilities. We want to see any REO that the borrower may own. And we also want assets to account for reserves.
Yeah, great job, Oscar, really. So, I mean, I think, Oscar, you work with Ralph down there, he calls it the DNA of the borrower, which I love that expression. So, it's really important for you to give us those key fields of the 1003 on there. Like Oscar said, just make sure that business name matches the bank statements, income. We're going to calculate that income for you, right? So as Oscar and Lisa have mentioned, we got a team of experts that calculates that income for you, assets, where they've been living, how much have they been paying, all those things. And you know why? Because 30% of the loans we close here at Angelo don't meet our guidelines. So as Oscar mentioned, you want a quick turnaround. Well, you want to get an exception on something that maybe doesn't meet our guidelines. That is critical to have that information on the 1003. So Oscar, thank you for sharing that. It's really key, important. Lisa, tell us just what we're looking for on a credit report for these borrowers.
So first of all, we're going to look at the primary wage earners middle score for this program, which is great for most situations. We do want to see that they have trade lines. So we're going to look for either 3 times 30, so 3 trade lines with at least 12 months history, active in the last 12 months, or 2 trade lines with 24 months history that have been active in the last 12 months. So that's pretty imperative to look for. We're also going to take a look at that they've had no 60-day lates on consumer lates in the last 12 months, as well as collections and that sort of thing. Now, medical collections are excluded. We're going to look at the file date of those collections, and it needs to be outside of 24 months. So we're going to look at that as well. Like I say, the housing history is very important to us. That's what we look at for the last 12 months. We want to see less than 1 times 30 or less in the last 12 months on housing history. So you need to take account for if it shows mortgage on the credit report, and if it does not, we are going to ask for canceled rent checks to verify that they have had indeed less than 1 times 30 on the mortgage in the last 12 months. So we, the minimum score for VOR, we do have an option for VOR, but we can get into that later for less than 80% and stuff, certain scores. So basically that's it. Rent-free is not allowed on our bank statement program. I think that's a key point to make mention of. So
yeah, the questions are coming in. So we really wanted to take that time to talk about the 1003 and the credit report, because this is a deep product. This is a deep dive into our bank statement program. And our bank statement program is almost 60% of our business. So it's critical. There you go, Oscar, move around. So it's critical that you know this and really learn it. And again, that's why working with Lisa, Oscar, and any of you, if you're working with other account executives, that you work hand in hand with them on anything. So the questions are coming in. Just want to make sure everyone's aware this is being recorded. We will get this out before end of day tomorrow, the recording. If we don't answer any of your questions, we will have your account executive reach out to you no later than tomorrow to get you your answers. Danielle is asking a couple of questions here. I know, Lisa, you mentioned 30-year fixed. That's all we have, Danielle. We don't have any ARMs at this time. Oscar, talk about the non-warrantable condos. Danielle's firing away questions here. I love it. So thank you, Danielle. Talk about non-warrantable condos, more of what you see, Oscar, the deals that kind of come to us.
Whenever you reach out to your account executive, you want to specify what it is that makes that condo project non-warrantable, because there can be many things that'll classify a condo project as non-warrantable. I would say every lender has a certain appetite. Our appetite for non-warrantable would be a condo project. And generally what I see is a condo project that has a high ratio of investment concentration. That excludes when a single person or entity owns 20% or greater of that condo project. But let's say that you have 100 units, 100 of are owned by 100 non-owner, then that is something that we do. There are times where the condo project may have some sort of litigation. The litigation cannot be structural in nature, but let's say that they're getting sued over a paint job. That's something that we can also look at. We need the litigation documents. That's something that you would collect up front when you're submitting your 1003 and credit report to your AE. That way they can send it to our credit. We can send it to our credit desk for review and approval.
Yeah, thank you, Oscar. Lisa, anything to add there or? Anything?
No, really, just the non-warrantable condos. We've been really excited about, being able to offer the nightly rentals and that sort of thing. Of course, you want to be aware of any characteristics that show as like a lodge or something, to where it, if you type in if you Google, and I would Google search them, every one of your condos, to take a look at the site and make sure that it doesn't appear to be an, one stop to, like a hotel where you can schedule your nightly, stay. Those type of things are going to, cause a problem for us. But that's all
John, I want to add that we do have a condo questionnaire that we require, and so you want to make sure to take that and download it from our website. Your AE can provide it to you too, and you want to collect that up front. That way we can review it prior to you submitting the loan to underwriting.
Yeah, and I think we're going to talk a little bit more about that, Oscar, about really protecting your referral sources, right? That's key to getting all this information up front. Lisa, you talked about the 50% expense ratio. Mary Ann would like a little bit more details on, I know you said we default to a 50%, maybe talk a little bit about the characteristics of the business also.
Sure. So obviously you have those people who, so 50% around, that's basically, it usually works at 50%, but you run into those situations where it's like a web-based a person that's web-based, right? They do something over the internet. They have really no expenses. Or even realtors have very low expense ratios because they're working for a brokerage, so they don't have a lot of expense of their own. Those type of people, we're going to reconsider that expense ratio. And at that point, as long as we can get a third-party verification, and that be it from a CPA or some sort of tax preparer that just verifies that what their actual expense ratio is. If it happens to be below, say, 30%, then we're going to allow them to use up to 70% of their income versus 50%. If it's for those type of people, such as realtors, we'll actually allow them to go to 85% of their income and just use a 15% expense ratio. Now, one great thing is if you're going personal bank statements, but they have a separate business account they use for expenses, we can actually give them 100% of those net deposits. Okay, so we just need 2 months business bank statements showing that they basically use another account for expenses, and we can use 100% of those personal bank statements. So if they pay themselves well, that is a great way to go, right? So otherwise, like I say, those larger places like, restaurants and those sort of things that have a really high expense ratio, we all know them, builders, they're going to be hit at 30% of their income. And that's just because we really do know that their expenses are higher, although you can get letters for those too if it's just one of those fluke situations. So it's a case by case.
Yeah, Lisa, you clipped off a bunch of questions there, from Brandy. Hopefully that answers. Brandy's question is a little bit more about end-in balances. If they're always in the negative, then that might be an issue, but we strictly go by our expense ratio there. So Brandy, hopefully no condo tells, Tim, sorry about that. But Oscar, ask about, talk about a couple things. I'll go to you first, Oscar, for NSFs. We have Susan wanted to know, how do we look at NSFs?
We have the requirement goes up to 6 NSFs per 12-month period. NSFs are overdrafts. Now, there are compensating factors, right? So let's say that you have something that's slightly over 6 on it during a 12-month period. Maybe sometimes you can notice that they had 1 month where they had more than others. And you've got a good LTV, or maybe they have very strong reserves, they have really good credit, they have several mortgages and they've never been late and they've always paid on time. That's why it's really important to work with your AE. And when you see things like credit things, I know that we're mentioning a lot of detail, we're talking about requirements. If your client meets the FICO and LTV bucket, as long as they're not outside of the 24 months on foreclosure, bankruptcy, didn't do a credit event, if you see a couple credit dings, do not turn down that customer. Give your AE a phone call and go over that scenario with them, because we know our appetite for loans. So we can ask you questions about compensating factors before you send us the 1003 credit and the bank statements for review.
Yeah, so Oscar, you answered Susan's and Catherine's questions there, hopefully. Great. You mentioned something there, we know our appetite, and I mentioned it earlier on, some people was probably still jumping on. But when you're working with seasoned AEs like Lisa and Oscar, they know what Angel Oak likes. And they know that because our vertical integration. The people who run our credit, if Oscar is not 100% sure about doing a prequal, we have a help desk he goes to. We really understand how important your referral relationships are. So that vertical integration, we're not coming back after you get a clear to close with additional conditions. So really do your homework. If you are not signed up with a non-QM lender, do your homework. Ask them, are they vertically integrated with their capital partners? And we work with Angel Oak Capital. So just want to make sure everyone's aware of that. Lisa, you touched on the 40-year interest only. Our self-employed borrowers love cash flow. Talk about how that interest only works, please.
Sure. So it's a 40-year IO period with a 10-year interest-only period. So the first 10 years is the interest-only period. Then at the end of the 10 years, if they happen to still be in this loan, it actually converts to a 30-year fixed at the same interest rate. This has an automatic recast feature to it. So anytime during the loan that they pay towards their principal balance, it's like a HELOC, to where the payment will adjust based on what they've paid down towards principal. At the end of the 10 years, of course, it recasts again to the new 30-year fix. So it will re-am itself on a 30-year fix based on the balance at that point. So it's a really stable, of course, it's a fixed rate. So it's not like a HELOC that's based on prime or anything. This is a fixed, 40-year basically for the whole 40-year term. So great option to show them that they can still cash flow on properties for investments or keep the family in the budget that they planned on and not have to compromise on the home that they buy. So.
Yeah, you mentioned that, and then we were talking about, you've mentioned realtors a couple of times with whether 1099 or low expense ratios. 9% of the loans Angel Oak closes underneath our bank statement umbrella, whether it's bank statements or 1099, 9% are realtors. So just think about that, so, and we'll talk about marketing afterwards, but that is such a key statistic in my eyes about realtors and using that. Oscar, we talk about purchase, refinance, cash out. Talk about delayed financing, because I know in Lisa's market, and I know where you work and where I live, these are still red hot markets. So talk about delayed financing, Oscar.
Yeah, the red hot markets. So there's a lot of competition. So delayed financing is a great way to keep your client competitive, to win deals, and then be able to get cash back. So if you have a customer who buys a property cash, because cash is king, they don't want to get into competition with anybody else, and they really want that property, you can help them get their cash back up to the maximum rate and term purchase LTV without a cash out rate adjustment. So it's really powerful. A lot of people are teaching their clients how they can leverage the equity that they currently have in their property with less than 6 months ownership to pull cash out and continue to buy more properties. So that's what delayed financing is.
Yeah, great point. James, thank you. James just closed his first one last week, and he's working on another one. So, and that's kind of ironic, because those self-employed people, they've been told no, or they looked at their tax returns and they say you don't qualify for that. Guess who's buying those luxury houses? Those are self-employed borrowers. They're not W-2 borrowers. So, those self-employed people will talk to other self-employed people. And James, hopefully that's a referral source that you received from the first one you closed. So that's awesome. Thank you. So a couple of other questions coming in here. Lisa, what's our DTI, debt to income ratio, allowed on our bank statement program?
43 front end ratio, which we do have, and a 50% back end ratio. And then of course on investments, it's just a 50 back end ratio. So yeah, pretty hard stop for those ratios.
Yeah, Terry had a question to follow up to the interest only. Yes, if you put any amount towards principal during that 10-year term, the principal will recast for you. So thank you for asking that, Terry, as a follow-up. And there is a price hit of a quarter to the rate for interest only. So thank you. So Oscar, Greg's asking here, real estate agents, maybe give an example of why someone would go 1099 maybe versus bank statements, and more in the case of realtors. Sorry.
In case of realtors, well, I mean, I'm in sales. We're all in sales. The sales cycle can change. So sometimes, let's say that you have a lot of properties in your pipeline you're expecting to sell. They may sell in 1 month. You may have a month with a gap. On the bank statement program, gaps, zeros, low deposits, zero net deposits doesn't always reflect well. But when we don't look at those, we look at 1099s over the course of the last year or 2 years. We're only looking at the 1099s and year-to-date earnings. So that's one example of when a 1099 option may be easier for your customer. Another example, we spoke a little bit about overdrafts and Nsfs. Sometimes that can also help save loans. So those are two quick guides on why the 1099 option may be an easier option for your client.
You're good, Oscar. I wasn't even thinking about that with the Nsfs.
I was neither. I was like, oh.
Yeah. So, and again, that's why working with your account executives is really key. So, Greg, hopefully that answers your question. And then Deborah's got a question here, Lisa, about can you do a combination of a W-2 borrower maybe with a self-employed borrower? So give us an example of something like that.
I love that. I'm glad that someone brought that up and asked that question because it's huge. But yeah, so as long as the self-employed or the gig work is, the gig employment is at least 30% of the total qualifying income, then yes, we can use both. And so what we do is up front, of course, when we get the bank statement review team, we have them review the self-employed income first, right? So we know what the bank statement income is. They're going to remove any of the W-2 income piece of that from upfront. We submit the W-2 and pay stubs only, or of course, if it's Social Security, whatever the award letter is, only. No tax returns ever submitted on bank statement loans, please. Just the W-2 and pay stubs, and you'll calculate that as normal. So we'll add that to the income. Like I say, the self-employed piece just has to be 30% of the total qualified income. It's awesome. It saves a lot of deals. So
yeah, a great question. So hopefully, Deborah, hopefully that answers your question there. We'll talk about, there's a lot of questions coming in about regarding rates, regarding lender paid comp, borrower paid comp. We're going to get to that. We're going to go over our quick quote tool, and then we're going to also talk about how to market yourself out of your normal channels and how your account executive can help you on that. So, and again, just a couple of people have also asked this. Yes, this is being recorded. This will go out before end of day tomorrow. And if we don't get to all your questions, we will definitely have your account executive reach out to you to answer that question and hopefully stir some more questions and some more business for you. So, okay, no W-2 transcript. We talked about that. Oscar, talk about a CPA letter. When do you need one in regards to the expense ratio? And if we talked about that already, I apologize. So
the CPA letter is going to be, we're going to condition for, one condition that you're going to get is verification of ownership percentage for your client of their company and how long they've been in business. And the most popular condition, well, the most popular document, sorry about this, that we condition for will be the CPA letter for that. Now, in situations where your client's business expenses are less than 50%, which is the standard deduction that we apply when we calculate the income during the pre-qual phase, in that case, you want to have a conversation with your client. You want to tell them that we deduct 50% initially. If their business expenses are less than 50%, then they can add that expense percentage to the CPA letter. We do require that prior to submitting to underwriting. In fact, I would say prior to disclosures is what I communicate, because we want to make sure that we have our income up front. That way we can have DTI accurately.
Lisa, I'm laughing. Tom, I love it. Literally just got an AOMS conditional approval in my email. Turnaround time was 2 days. So I guess we don't have to talk about our turnaround times right now. So thank you, Tom, for your business and being on this and wanting to learn more. Lisa, talk about gift funds. This is a great question from Susan.
So gift funds are allowed on these loans as long as the borrower they can show that they have 5% of their own funds. Plus the reserves have to be the borrowers themselves. So the gift funds cannot be used towards gift funds, and only on the primary residence type situations can they be used. So, but we do allow them. Yeah.
And Oscar, clarify for Matt here a little bit of, we can do a 12-month bank statement, but haven't approved that the borrower has been self-employed for 24 months.
Okay, so if your client's incorporated, you're probably going to get a condition for the articles of organization, so whether or not they have an LLC or corporation. The CPA letter has to confirm certain bullet points. You can have a CPA letter that'll confirm these bullet points. Ownership percentage, so are they 100% owner? Are they 60% owner of their business? This is something that you also want to tackle up front. It's a conversation that you want to have with your client because it does impact their income calculation. We do have alternatives to the CPA letter when verifying ownership percentage or the length of time that the business has been open. We can use an operating agreement, a legal operating agreement, and we can also use a attorney, a business law attorney, someone who specializes in it. They can also provide that letter for verification.
Thank you, Oscar. And then Lisa, talk about reserves, please.
So we require 6 months reserves on the subject property only for all of our programs.
Yeah. So thank you. Couple other things here. Yeah, we can, and again, just what Oscar went through. So hopefully, Claudio, this is, a 1 year. We can use 12 months, and again, just have to be able to prove that the borrower has been self-employed for 24 months. So a couple other things I wanted to talk about here is, how to help you when you are, one of the things, I don't know if either one of you guys talked about the increase in the purchasing power of that self-employed borrower. So Lisa, maybe give an example of something that you just recently had their tax returns, and then, how much you were able to increase the purchasing power of because of using bank statements.
Yeah, we actually just we have deals. People call us all the time that are trying to squeeze. They're really trying to squeeze these borrowers into this tiny box. And of course, here, as you mentioned, is a really hot market in Utah, and the purchase prices have gone up like crazy, and so they're trying to pre-qualify, and they're just so tight. And we actually had an agent that one of our borrowers had closed through another loan officer, yada yada. It came back to us. They had the loan officer contact me to see because they were self-employed, and we were able to literally, we're going from just this little tiny $500,000 house. They were able to buy a $1.5 million home with the income that we could show on the bank statements. They showed like 50 grand a month on their bank statements. So it's a significant difference usually to use their bank statements. These are smart people that do their taxes, of course, so they don't want to show all the income. But yeah, so it was a huge thing. They were able to get into the home that they really wanted to be in because we could show the significant increase in the income. So it is a huge selling point, especially for your realtors.
Yeah, Lisa. Wow. You're increasing everyone's, along the food chain, the commission, check. And as Lisa mentioned, the example she's giving you there, they increased that borrower's buying power by 3 times. And so this is really where I want to go back to everyone on this call. If you are meeting with a self-employed borrower, right? Why not grab their tax returns, because you're going to go down that route. And why not grab their bank statements at the same exact time? Because what happens is, we find out there's 2 weeks left on the contract. Everyone's hair is on fire because guess what? You finally got their tax returns before you wrote that pre-approval letter. And you're like, oh my God, they don't qualify. Now I've got to go the bank statement route. Why not go down those parallel paths, same time? Doesn't cost anything to send a prequel to Lisa or Oscar or any other of our account executives across the country. Excuse me, I'm trying to talk too fast. And go down those paths. And then you could go back to your referral source and say, well, if we go tax returns, they can buy that $500,000 house, like Lisa said. Or if we use their bank statements, we're going to go to a $1.5 million. And no one's hair's on fire at that point either, right? We haven't submitted a prequal letter or a contract. And guess what? We can do prequals on TBDs. So just so everyone knows that. And then Oscar, we talk about, I was just reading an article this morning, and you mentioned delayed financing. Talk about how cash out is starting to grow right now, right?
Cash out is starting to grow. People are starting to use those credit cards. Things are getting more expensive. And we also have, on the flip side of that, borrowers are sitting on the most equity they ever have in a home. So we've seen a big uptick in cash out right now, and you can cash out up to 80 LTV on the program.
Yeah.
So
it's huge, Oscar. As you said, Americans are sitting on huge amounts of equity in their homes. And I wrote this down this morning because I read this article, Oscar. It's Q1, 71 billion more in credit card debt than in 2021. In Q1, 71 billion more credit card debt than in Q1 2021. So think about cash outs. I know the one thing I like about cash outs, you're taking 4 things out of the equation. You're taking a seller, a seller's agent, a buyer's agent, and you're taking a contract date out. And right now, 30% of what we're closing today are cash out.
Yep. So, and they're setting themselves up for the next time that rates drop. So you have a client that you're going to help cash out because they're possibly self-employed. They need the money so that they can re-inject it into their business. And then down the road, when rates drop again, you can contact your customer and help them refinance into a lower rate.
Oscar's on fire today. That's a great point. Yes, Claudia, 80%, as Oscar said, primary cash out. So we'll do cash out on second homes. We'll do cash out on non-owner occupied. You know, I encourage you to come to next week's for the debt service coverage ratio deep dive. We'll get into that there. We're almost 20 minutes ahead of the hour. We've gotten through, still have some, can't do commercial properties on this. Sorry, Scott. So Oscar, maybe just help Ray here a little bit, understand more people maybe who are more 1099. You know, and maybe if you've got an example. I know we talked about realtors. We talked about, you know, a lot of IT people, but just maybe go into some maybe examples you might have, Oscar.
People that are more 1099. Well, something that we saw a lot during COVID in 2020 were people relocated to different jobs. They took what we call the gig economy. So you have people that are using rideshare services, but they are also employed by them. So they're 1099 with Uber or Lyft. They may be doing delivery with Amazon. A lot of people that you see on a daily basis may be 1099. You could, you know, your barber or your hairstylist that you go to, your manicurist, they may be 1099. You want to ask. There are people that you come across on a daily basis that are 1099. Now, if your question was more geared towards how to structure, whether you choose a 1099 option versus a bank statement option for your client, well, the 1099 option isn't meant for someone who has many gigs. It's meant for somebody that's contracted with one company and gets a 1099 for the past 2 years with one company. If you have somebody that does get 1099 from various sources over 2 years, then in that case, you want to place them on a bank statement program.
Yeah, so yeah, thank you, Oscar. And then we got another question here on TBDs. You know, just on the address, on the property address line on section 4A on the loan application, just put TBD. You know, your account executive is going to see that. So yeah, we can definitely do a pre-qual for you up front without an address there. So just want to make sure everyone knows that on any purchase on any of those. Okay, we've got a lot of people asking about rates, how they get paid. So like I said, it's 20 minutes to the top of the hour. We try to respect everyone's time. We're going to get into, I lost my agenda here. Sorry. Oscar, I think Oscar, you were going to cover, we're going to cover our non-QM quick quote and then how people can get us a pre-qual. So Oscar, take me to the home. I'm on the home page, Oscar. How would someone get a rate quote from Angel Oak?
Perfect. So a common question that I get is, Oscar, how do I find pricing on your website, or how do I submit all these documents over to you on a bank statement loan for calculation and review? You have two options. You can choose the non-QM quick quote link that's on the top there next to login. You do not need a password for this. You don't need a password at all. Or you can choose the button that's right there in the center that says non-QM quick quote. You go ahead and you click it. If your channel type is set up as broker, then you will choose broker. If it's set up as non-del, then you choose non-del. Then you go ahead and you start entering your loan parameters. So this is step one. Let's use a $500,000 loan amount. We mentioned how the bank statement program is going to help raise the average purchase price, so it helps raise your average loan amount too. The average credit score on bank statement loans of the buildings that we finance is typically above a 740. So these borrowers have fantastic credit. The average LTV is generally between 75 to 78, so let's choose 75 as an option. We're going to price this out as a purchase. Lisa and I both talked about housing history, how we do a 12-month look back. So it's going to default to 0 times 30 over the last 12 months. The property type is 1 unit. We're using a purchase as the transaction type, and let's use 24 months of bank statements. As this is really important when you're pricing this out, to make sure to choose the correct income documentation because it defaults to full doc. If you're pricing out a bank statement loan like we are now, then you want to make sure to select bank statements. Let's leave the occupancy as owner occupied. Check if your client is a U.S. citizen or permanent resident alien. The lock duration, we mentioned our turn times, we're moving pretty quick, 2 to 3 business days. So we can get a loan closed within 30 days. As per waiver, we're going to leave as no. Interest only, we talked about 30-year fixed and our 40-year IO option. If you want 40-year IO, then all you have to do is click 40-year IO. And this is, everything generates really quickly because it's all live for you. Your compensation type, you'll choose between borrower paid or lender paid comp. And when you're ready, you want to click on view rates so that you can look at the full rate stack here. Now, I'm just going to walk you through submitting everything over to us. So you want to indicate to your AE, you're not locking a loan here. You just want to indicate to your AE what to look for when we get the income calculation back from our bank statement reviewer, and what to use for DTI, what rate to use. You're going to select your rate, and then you're going to click select option in blue. You can upload your 3.4 file. If you don't know how to, you can skip this step by clicking next. We're still going to require the 1003, all pages of the 1003 in this step 3 in PDF format. Make sure to select your account executive. If you happen to be choosing me, it's very simple. All you do is click O on your keyboard, or click L and it'll go to Lisa. You're going to fill in your information, and then you'll upload your 1003 and credit report in PDF format. We do have a business questionnaire that is required in order for us to finish up the pre-approval. If your AE has not sent you the business questionnaire form, you can click the blue button there that says questionnaire and download it. This is going to help you get ahead. We also have a link that we send you in case your client is more tech savvy. It's an easier way. They can fill it out on their phone. It's a really quick questionnaire. And when you're finished up with the questionnaire, you want to upload the bank statements. Make sure to upload the bank statements to where we have bank statements with the red asterisk. This will capture all 24 documents if your client happened to send you 24 separate PDF files. Or if they're all listed on one page on one PDF, that's fine too. And when you're done with all of this, all you have to do is click submit on the bottom right-hand side, wait for it to say successfully submitted, and that means that you are in line for review. If you have any additional comments, I heard someone say this, that is a confession box. It stays with your AE. We are working with you. Please give us as much information as you possibly can on the file, because again, we're here to help you close this loan.
All right. So that's, so that's where that's where you can get rates. Lisa, Oscar, they're available all the time, but it's a great way to just start your mind thinking in the right direction where you need to go, and can really help you have better conversations when you do reach out to your account executive and you say, oh, well, I ran this scenario, but it didn't give me anything. Well, did you check this box? Did you check that box? So, and that's how you get us a prequal. And, we're right now, if everything, as Oscar mentioned earlier, if the 1003 is complete, if all the bank statements are there, our bank statement review team is calculating that income for you, and then Oscar and Lisa or any of our other account executives are going to produce that prequal to you. And if there's any questions, they'll reach out to you. And usually bank statements right now, I would say less than 48, probably almost 24 hours, guys. Yeah. I mean, they're coming back pretty quick. So, yeah, so that's it. And then you heard one of our gentlemen here is already closed his loan, two-day turn times in underwriting. Yeah, I like to underpromise and over-deliver. Whatever, right? So, and I would 2 days, 3 at the max. So it's a really we're humming along right now. So it's a good time to close the loan with Angel Oak. So a lot of people have asked about marketing. How do you market yourself in these channels or in the non-QM world? So Lisa, we're going to go to our marketing portal. Now, that quick quote that you just went through, you don't need login credentials there. You don't need to be approved with Angel Oak to do a prequel. We like you to be, because then the next thing that happens is people, I got to get signed up. I have a live deal. So get signed up now if you're not. but logging in here, you do need login credentials to get to our marketing portal or to submit a loan to Angel Oak. Go ahead, Lisa, take this away.
So first of all, I did want to mention, if you don't have logins, of course, you can reach out to your account executive and we can send you the broker user form to submit, or you can also find it on our main page under broker or TPO form. So you can find it under resources on the front page as well, and you can submit that yourself to get logins for our portal. So this is the underwriting portal / marketing portal that we have. And the great thing about it is we have the best marketing team in the world to do these. And all we do all day long is non-QM. That's what we do. So you don't have to reinvent the wheel, basically. You can use our incredible marketing tools. So what you'll do is you'll log into the portal, and then you're going to click on marketing portal, which is on the top tabs. And here it's going to offer you all of our different marketing pieces that we have. We have presentations, whiteboard videos, social media posts, and flyers that are all customizable. So there's nothing with Angel Oak signet on anything. It's all of your stuff. Also, so what you'll do is you click on flyers, for example, and once you click on the flyers button, this is where you start to create your flyers. So you can see here, we actually even have them established for, gosh, all of your sphere of influence, including CPAs, financial advisors. I mean, you could go out to apartment complexes and, for lease versus own type situations. We have every flyer you can imagine, great ones for your investor groups that you're marketing to investors for the debt service ratio, bank statement product, all of them. So you'll go here. This is where you can upload your logo, your picture, all of your personal information, all your business information, and then as well you can include the disclosures that you're required to show based on your state, etc. So you can do all of that, and then it produces a beautiful flyer with all of your information. The other thing is the drop down John's going to show you now. Once you create one of the flyers, it gives you the options of all of the flyers we have available and automatically imports all of your information on them. So it's awesome. Yeah. I really also like, we've talked a lot about realtors and marketing to realtors and how many of them actually do loans with us. If you schedule a realtor event, we of course love to do them with you, but you can actually use our deck. It's available to you here. And not only do we have the presentation, but we have the flyer to market the presentation. So you can prepare the presentation, the deck page or the decks for you, the PowerPoint, and actually do a presentation with non-QM for yourself to your realtors. And it's really, really great. They're very anxious to hear this information right now. So if anything, you usually end up getting a realtor's loan out of the deal. So it's always a win.
Well, Lisa, like if you use the statistic of 9% of the loans we close are of bank statements are with realtors. If you get 12 in a room, the odds are you're going to close one of them. So yeah. How great would that be to not only are you informing, your referral source, but you're closing one of their deals for them.
Yeah, exactly. So all of these tools are available, like I say to you guys, once you're approved and you can access the user access form, we can help you get involved with, or get into the portal. So no problem there.
Yeah. So one of the things we also one other one that I know a lot of people like, social media. If you're using, Instagram or Pinterest, Facebook or LinkedIn, we've got all these already pre-canned for you. You don't have to do anything. So these are all here for you. Bank statements towards borrowers, if you're looking for them, already done. Bank statements towards realtors through social media, LinkedIn, Facebook, Instagram, and Pinterest. So just a great, like I said, we've done the work for you. One of our account executives here says, Angel Oak has taken a lot of time to invest in your success. And we've done that by really having these turnkey marketing materials that are available for you. So just remember that. Oscar, anything to add regarding marketing?
Yeah. So something that I've been getting asked a lot frequently that I've done in the past too is partnering on webinars or presentations with loan officers and presenting to realtors and teaching them how they can grow their commissions by the end of the year by promoting non-QM and helping one non-QM buyer a month. So you want to take the average percentage that the realtor is making in your market, the average purchase price, multiply that over the remaining months that we have in this year, and call on any realtor that you haven't worked with or your referral sources. You want to tell them, hey, listen, I want to set up a lunch and learn with you. I want to set up a Zoom meeting with your office because I'm going to teach you all how you can earn X amount before the end of the year by helping one person a month. That's it. And that's a really powerful line. That's not something that I came up with myself. I coined that from a loan officer that they use. And it's part of our presentation too. It's part of the deck. Really powerful. No one's ever going to say no to you teaching them how they can make more money.
Yeah, Oscar, well said. I mean, it is probably the most powerful presentation you can bring to your referral source. And if it's Lisa or Oscar, whether it's on in person or via a webinar, they're not going to say anything about Angel Oak. They're going to just say, we are just one of your investors. And, refis, the mortgage bankers said refis were going to be down 64% this year. We've blown past that. It's over 70%. So really, think a lot about the purchase market. Lisa mentioned, you have self-employed people are buying those luxury homes. Think about that delayed financing. Think about, cash out. There's a ton of equity, as Oscar mentioned. So, we're getting near the top of the hour. I want to be respectful of everyone's time. We really, enjoyed bringing this information to you. I know we do a quick survey after this. Please take the time to do it if you can, and provide us some feedback and things we can do better. So, Lisa, anything in closing you want to share?
No, I think it's a really exciting time for everyone. Everyone's been really extremely busy. We understand that. You've had a ton of even rotting fruit on the ground that you've had to pick up and take care of. Now is the time to use us as your tools to learn this non-QM, learn how to not only sell it but close it. Our teams are incredible. We've got the best underwriting staff and our account managers that are our support groups that support behind us, that we can help you get through these, and you can become the professional in non-QM and not miss a beat in your income. I mean, this is the way to sustain your income through these hiccups and these crazy times. So we can help you do it, and we're ready to. That's the thing, is we have fun with it. We do it day in and day out, so it's the time to do it.
Oscar?
John, you mentioned it before when we started this call, the opportunity. We took a poll. The number was 65% of the people attending today had not done a bank statement loan yet. Think about your market. So have the tools. We're ready to help. It's just about getting out there and educating the market that these programs exist, because there are a lot of people out there that simply don't get a mortgage because they think that they don't fit the tight traditional financing space.
Yeah, and if you're lucky enough to work with Lisa or Oscar, you could see how professional they are, and all the account executives across the board at Angel Oak are the same. But Oscar, Lisa, I really appreciate you guys taking your time to really help educate our customer base. For everyone who participated today, we really appreciate. For those of you who've closed loans with us, we really thank you for your business. For those who haven't, let us help you grow your business. Have a great day, and we really appreciate your time. Thank you. Again, this is being recorded. We will get this out before end of day tomorrow. And if we didn't get to all your great questions, your account executive will reach out to you. But thank you very much for attending today. Thank you.
Thank you.